It's now recording. Let's see, we got a few people coming in still. Good. All right. So some of you are familiar with some of these strategies, but today I'm going to take a look at some of the sectors we trade. And we do all of these sectors with options. So we can create an extremely diversified portfolio of trades where something is always going your way. It's never, whatever you're trading isn't always going your way, but if you have enough diversity in your account, there's always something making you money up or down. We trade things up, we trade things down. It's pure directional. We don't do spreads, we don't do spreads. Oh yeah, and we don't do spread trading. Don't believe in limiting our ability to make money by putting on spreads. Don't believe in having to put more money into trades gone bad with a spread. That was how I originally started and Becky started, and we got really, really good at it. But along the way, it's if you have a boatload of money and you're really, really good at math, then spread trading is great. But if you don't have a boatload of money and you're not a math expert, then there are so many simple ways to even be more profitable by just being a pure directional trader and with options, just buying calls and buying puts. But you really do have to have someone show you those strategies, or else you can burn through a boatload of money trying to learn on your own. It's really hard to do this on your own because it requires a lot of research, and there's so many strategies, what works, what doesn't, and who's willing to share knowledge with you for a reasonable price also. A lot of people can do this, but many will not share the knowledge with you. So I've always been a teacher, apparently, for years and years going back. I train traders, I train fitness instructors, I teach kickboxing classes, I train boot camp people, I train, it's just my thing, I guess. I'm a trainer, I'm a coach, and I do share knowledge. So this is our list of ETFs we trade and sectors. And this is all we trade with ETF options, no other ETFs, this is it. We chose this list because there are probably about 1,000 ETFs, but these have enough options and open interests to make them tradable. There are a lot of ETFs for different sectors, but most of them don't have a lot of option volume. They don't have a lot of open interest or any open interest, even though they're optionable. There isn't anything to trade. If you trade it, you will be the only one. But this is a nice grouping we have where we have enough open interest and other people trading it. So getting in is easy and getting out is easy in most cases. And for the people I'm coaching, we go through that in more detail to show you when to not take an option trade, because sometimes it's just not a good idea because of open interest or volume. All right. Today we're going to look at the Donchian crossover buy. But before we do this, I'm going to take a look at the bigger market picture and show you what's happening now compared to what you might be hearing on television, on internet, on some financial stations. Along the way, feel free to unmute and ask any questions at any time. If you raise your hand in the Zoom meeting, I will not see it. So unmute, ask a question, or type it into the chat window, and I will eventually be able to answer your question. You type in the chat window, or you just raise your hand. Excuse me, not raise your hand, just unmute and ask a question. All right, so I'm going to change the charts here and switch over to S&P chart, and we'll take a look at it. All right. What we're looking at right now is a chart of the S&P 500, and this is the year 2002. This blue line is a 40-period moving average. This is a monthly chart. So each candle here, each individual candle represents 1 month of trading. The open, high, low, and close of 1 month of trading. When you look at the big picture, it really makes things a lot more crystal clear, okay? So this was the big market crash in 2001, okay? And then we went back above the 40-period moving average. This is in 2003. From 2003 through 2008, We stayed above the 40-period moving average. This was the market crash in 2008. This massive decline. Remember, each of these is 1 month. Okay, each candle is 1 month. If you take a look at these, 1 month here is the equivalent. It dropped more in 1 month than in several years previously. Okay, but this was 2008, and then in 2009 and 10, we're back above the 40. We use the 40 in a lot of our strategies, both daily, weekly, and monthly, because it's a line in the sand, which we started using a long time ago, and we've kept it, and it works for us in all different time frames. There's a line in the sand, and also an indicator of trend, and above or below, we have certain expectations. So it went above the 40s in 2010, and it stayed there above the 40. Every couple of years, it will pull back to the 40. Every couple of years, it pulls back to the massive uptrending 40. This is a monthly chart, not daily, not weekly, monthly. Every couple of years, it pulls back. Every couple of years, it pulls back. It closed below for 1 month. It closed for below 1 month and then went right back above. If there were 2 closes below, 2 lower closes, then it might have been an issue of going lower, but it didn't. It tested the 40, went right back above. A couple of years later, like in the last 3 months, it pulled back again to the 40. When you hear all this sound of doom and gloom on all the media channels, and they're telling you what's happening in 1 day, but they never show you the big picture. Every couple of years, they pull back. Okay, this went from, this is S&P, went from, I'm looking at SPY. So if I go in from 470, let's say 480 down to 380, it's about a 10-20% drop. What they'll tell you, oh, the market dropped 10%, we're in a bear market now. So if it went from here to here, that's 40, it goes from here to here, they'll tell you we're in a bear market now. Everyone do it, everyone, the sky is falling. And then it hits support, and the uptrend is still soundly in place, hasn't changed since 2010. We get these pullbacks to support. It happens every couple of years. You don't stress over it. On a daily chart, you see all this craziness, but when you look at the big picture, there's no real craziness. It's normal, expected. I expect this market to pull back at least halfway in the last month's range, and maybe even retest some of these lows. That's normal and expected. Okay, so there's nothing out of the ordinary going on, especially this year has just really been actual normal trading. If you're familiar with seasonal patterns, nothing's been out of the ordinary. Markets going down and sideways during the summertime months is normal and ordinary. Okay, this is all setting up so perfectly for an end of year rally, which is what we expect. I do expect this market to pull back some more in the next week or two. And right now we have puts on everything. We got puts every which way. We've had sell signals over the last 2 weeks, big time. I have all puts in my account. I have all shorts in my account. I have no long trades on right now. Everything is short with puts. A lot of them hit targets this past week, and more are still in play, getting there. And it'll probably hit Monday or Tuesday if we had one little push lower, and we will most likely push lower Monday or Tuesday. Remember, stop me anytime and ask questions. So anyway, that's the big picture view. So I would like to show the big picture. We're in a massive uptrend. Don't focus on what people say on TV, on those news channels, on those financial networks. They literally report on what is happening that particular day. If the market is down 1,000 points that day, that's what they're reporting on. If the market goes up 1,000 points the next day, that's what they're reporting on. And they will literally forget what happened yesterday. They live in the moment. They don't look at big picture. They live in the moment. They report what's happening now, and then they kind of speculate, okay? So when you learn to do this stuff on your own, you don't have to speculate. Just look at a chart. Yep, massive uptrend, pulling back to the 40, no big deal. So no big deal at all. But that's why it's good to stay grounded by looking at the big picture. Now, if we saw a close below the 40 and the next month later, another lower close, Well, then this market is probably going to retest these levels here and then some, okay? But right now, we're in a massive uptrend, and that hasn't changed in the last 12 years. So anyway, that's the big picture. Now I'm going to switch to the, go back to the handout you have. If you take a look at the chat window, you'll see the link to the website where I have the handouts. So take a look at the chat window in Zoom and you'll see the link for the handouts. It's in there. Just click on that website and you'll be able to download the spreadsheet, or excuse me, PDF file. There's also spreadsheets on there with a listing of the trades we had valid over the last several years. All right, so let me change the share and go back to the handout for a little bit. All right, so I put in here a sample trading plan. This is a real trimmed down trading plan. Okay, so this in the full trading plan, what you'll see is the details of all the indicator settings. Although I will give you all the charts ready to go, ready to trade, ready to review, ready to do analysis with, that's no problem. I will hand that to you. But if at some point in time you need to set everything up yourself manually, whether it's on the same platform or different platform, you will have all the settings available to you because they'll be in the trading plan, so you can actually put the settings in yourself if you need to set it up manually. The structure we go with is setup, trigger, trade management. This structure is borrowed from Jake Bernstein. The setup is visually what you look for. So you can have a scan or visually something simple that you can look at the chart and it's either there or it's not. So that is visually what I look for, the setup. A trigger is a confirmation, something that if it's valid on the chart, it will statistically increase my probability of this market moving in the direction I want it to within a given amount of time prior to moving against me, okay, to my stop loss, all right? So this will be something, the setup is something simple and visual, which you can see and recognize. And the trigger is more detailed checklist, go through this, this, and this, and make sure everything is right. So our detailed trading plans have literally all the details involved. This is just a trimmed down trading plan. As a sample, the actual full deal that I give to my coaching clients will have a lot more detail. And then for trade management, although we have 2 sentences here, this is what I spend time with one-on-one with people, because I can write this in 2 sentences, but to go over it, there are nuances, especially with options. So this is what I work with clients with to get this down, because this is how we actually make money. The analysis is easy. Making money with options, that requires a little judgment, a little skill, and a set of rules to follow as guidelines. All right, so now I'm going to spend a little more time on the chart, and then we're going to come back to the handout. So I'm going to change the shares on the chart. Any questions, go ahead and ask. Okay. I pulled up a chart here of IWM. That's the Russell 2000. IWM is the Russell 2000. Finding a nice clean example to look at. Okay. Let's take a look at this one here. What are we looking for? This orange line, that is the Donchian mean line. The Donchian indicator is a set of 3 lines, but I'm not showing the upper or the lower because we don't use them. So I don't want to add extra lines in the chart that we don't use. This dotted line is an upper Bollinger Band. I don't have the other 2 lines because we don't use them for this chart. So, and this blue line is a 40-period simple moving average, which you'll see on all my charts. So the blue line is the 40. The orange line is a Donchian mean line. That's the middle line in a Donchian indicator. And the squeeze indicator we're not using for the strategy. It's on the chart. Just because you see something on the chart doesn't mean it's applicable to a particular strategy. This chart is used for multiple strategies. Any other strategies might use a different indicator. All right, so what we look for visually, what we look for is the orange line to cross above the blue line, okay? So take a look at the data box here. Everything is color coded. So the orange matches orange main line, blue. So if we look here, it looks like the orange line could be crossing, but you visually can't tell by looking at it, because you can't tell visually either the orange line crossed above the blue line or not. So we put our crosshairs on that day, and then we look at the data box. On the data box, it says the value of the mean line is 221.75, and the value of the mean line is 221.73. Okay, so hey, the orange line crossed above the blue line. Okay, the Donchian mean line crossed above the blue line. Sometimes it's blatantly obvious, but if it's not blatantly obvious, then you have to use the data box to tell by looking at the actual numerical value. All right. So if you were doing your day-to-day analysis, you're looking for setup. So on this day, did the orange line cross the blue line? Nope. Next ETF, it goes that fast. Next day, did orange line cross the blue? No. Did orange line cross the blue? No. Orange line cross the blue? No. Orange line cross the blue? No. Orange line cross? No. Orange line cross? No. No. Hey, this might have crossed. It's close. Let me take a look at it. That's how fast your analysis goes with all of these 6 strategies. With all the 6 strategies, you're looking for a line crossing or a color change or a little change in direction of an indicator. That's all it is. It's very visual. So I can go through 28 ETFs to look at this strategy real fast. That's just by looking for 2 lines crossing each other. If I don't see 2 lines cross each other, there's nothing else to look at. You just move on with your life. Next thing, it goes by really, really fast. Okay, so I saw 2 lines cross. So what do? I'm going to switch back to the handout, and we're going to take a look at the next sheet on that handout. And I'll show you what we do to know if to trade IWM or not, using IWM, but I'll show you how we know what to trade. On the handout is an example of XLB. Okay. This is the material sector. How we know what to trade, Becky maintains all of these stats. Anything you see in a rectangle with a number in it, and words in it, Becky puts this together. She tracks every ETF, every stock, every Forex pair, every futures contract, everything we do. And it goes back anywhere from 17 to 22 years worth of data and statistics. So whenever you see anything that says win-loss stats on a percentage next and a percentage of wins to losses, that's going back 17 to 22 years worth of data, worth of valid trades. And that's how we evaluate and know the number. It's not just from a couple of weeks or a couple of months or a couple of years. It's going back since basically the start of the ETF or since the year 2000. Some of them, like SPY, I think we might go back past 2000, 1999. But it's every trade since then documented. And if we use the exact same trade management we use every single time, would we have been profitable or not? And we don't diverge from our trade management. We know this works. We have been doing it for a long time the exact same way. And it works extremely well with ETFs just by buying calls and puts. And the reason it works so well with ETFs is because we don't have the same issues with implied volatility as we do with individual stocks. So we can buy a call or a put and not be as concerned with time decay or volatility crush. Okay, so let's say if we place 100 trades, of the ones that actually hit the first target, probably 92 to 95% are worth more than what you paid for the option. Some of them will have some time decay, but the reality is more than 90% of them will actually be more valuable than what you paid. How much more valuable? That depends how fast the underlying moved and other variables that have to do with options. But usually in most cases, a winning trade at the first target, just the first target, is anywhere from a 3% return to a 50% return. That's the usual range, depending on the circumstances. And if you want more beyond that, it's a matter of trailing stops on remaining contracts, then you can get more. We had someone who made their trades available publicly to us several years ago. If you email me or message me or email me, you can either use my email on the handout or use the contact form on our website, behindscenes.com, and I will send you that listing. And he really laid out, he was so proud of his trades. He laid out all what he did, the wins, losses, and percent returns, and how much he invested in each. So you can go through that in detail. And that hasn't changed. We do the same trade management now as we did 5 years ago, as we did 10 years ago, as we did 15 years ago, because it works. So our trade management hasn't changed. So, but one of my coaching clients, he was so proud of it. He did a presentation with me and showed his real life trades over 7 months. And so it's good to take a look at that. And so just email me and I will send you a copy of that. All right. So this is how we track. We know XLB as the example. If we have one expiration cycle worth of time, we have 94% winning trades. Excuse me, 91% winning trades with a 1 ATR target. If you don't know what ATR means, it's average true range. And it's basically how much, that's an indicator on the chart that will show us how many points that particular ETF moves over a given period of time. So if we know that ETF moves 3 points over a certain period of time, that's going to be how big we make our target based on the ATR, because that is how much it moves. We don't just fabricate a number saying, I want it to move 10 points. You just can pull that number out of the air. And so we have a lot of information available to us. And so that's going to be what we base these targets on. So we know 91% of the time that this market this ETF will move 1 ATR within 1 expiration cycle. I'll go over what an expiration cycle is in a little bit. And 94% of the time, this will move 1 ATR within 2 expiration cycles. So more time, higher win percentage, okay? But also higher upfront cost for the option, so you got trade-offs. All right, so Becky maintains all of this, and this is what we give to the coaching clients. So they have these stats for each ETF, for each strategy, so they know what to trade and what to not trade. If it's under 84%, we don't touch it. It doesn't exist to us. It has to be 84% or higher for us to trade it, okay? So I'm going to go back to the chart now. I'm going to take a look at IWM, and show you what we would do here. So I'll let you know IWM has 98% wins with 2 expiration cycles, 98% wins, okay? IWM is the Russell 2000. It's an index of small companies. It's one of our favorite things to trade. The price is right. It's not overly expensive, not overly cheap, but not overly expensive, moves nicely, and the win-loss stats are just outrageously excellent. Options, a lot of option volume and open interest. Bid-ask spread is good. So everything just works really well with IWM. And 98% wins on this strategy over 2 expiration cycles. So we got a valid trade here. What do? We took a look at our trading plan. Everything is valid. We got the crossover, has to close below this Bollinger Band, and it does. And a certain number of days, this orange line had to be underneath the blue line, and it is. It meets that quite clearly. That's all detail when I go over things with people. But it meets all the criteria. And So what do? I'm going to buy call options the next day. So the next day, the market opens, take a look at open price on the data box at 221.83. I want to buy the first in the money option, assuming there's an option at every strike, and every strike is 1 point apart. If the market opened the next day at 221.83, and assuming a strike at every point, I need someone to tell me what is the first in the money strike for a call option, assuming a strike every point. What strike would be the first one in the money? Anyone?
221.
Very good. So the 221 strike would be the one we'd be getting at, that we'd be buying if we're buying the first in the money strike. Now on this day, the ATR, it was $3.83. Okay. $3.93. $3.93 is the ATR. That is going to be what we're going to use as our first profit target. And that's going to be added. So that number of 393 will be added to the open price the next day. So I need someone with a calculator. The open price the next day is 221.83. 221.83. What is 221.83 plus $3.93? So 393 added to 221.83. What's that value? 225.76. Okay. That is going to be our first profit target. Okay. So we know we have on this day, on 10/8 on IWM, we have a valid setup with the Donchian mean line crossing above the blue 40 period moving average. That's our setup. That's the thing we look for. We see it. It's crystal clear. Okay, so we got a valid setup. I go through all my trigger criteria, and you may not have the details, but they're all valid as to close below this Bollinger Band and a certain number of days below. This orange line has to be below the blue line. Everything is good. Okay. Whenever I see this setup and trigger valid, I know IWM has a 98% of the time since the existence of IWM, when this happens, that this market will move upward from the next day's open, at least one ATR worth of movement, 98% of the time within the next 2 months. It's going to be 2 expiration cycles. All right. It's about 94% with 1 expiration cycle. Okay. All right. So the next day we buy our call option. Let's say we buy it right at the open. Okay. So we got a call option right at the open. Let's say we got 2 options. We got it right at the open. No problem. Now our target is 225.76. When do we get to 225.76? We get it hits on, what's this high? This high is 226. So our target is hit on this day. On this day, our target's hit. Okay. So especially with a nice gap up like this and that fast to trade, we're looking at about a 20 to 30 something % return on our money within 4 days. If we're just doing first targets, a 20 to 30% return with a nice gap like that. If you trail stops and remaining contracts, there's a lot more potential. If you exit your whole position in the first target, you grab your 20, 30% and you move on with your life. Okay. If you trail stops, meaning you sell part of your position at the first target and then trail stops and remaining option contracts, then you can catch more of the move higher. All right. Is it that simple? Yes. It actually is. It just becomes a routine. Now that was with a $3.93 target. Now, let's say you didn't wake up in the morning, you're not getting up in the morning to get into the open. You're not going to be up at 6:30 the next day because you sleep in till whenever, okay? So let's say you got up later in the day. Later in the day, the market had dropped to, let's say, 221. So when you got up and looked at the market was down at 221. You can buy the 221 call option first right in the money, or extremely within pennies from at the money. So you buy the 221 call option rather than the original where you were going to buy the, so you buy, let's say it dropped all the way down, let's say the 220.45, you buy the 220 option. So you get in when the market's at 220.45. Your first target is still the same, except now you have a bigger profit potential. If your original entry was the open of 221.83, but you actually got in at 220.45 because you got in when the market was down here. What is the difference between the 221.83 and 220.45? What's the difference between 221.83 and 220.45? What's the difference in that? Someone type it in. Difference between the original planned entry at 221.83, but where you actually were getting in at 220.45. What's the difference between those two values? Someone type it in. Okay, Becky typed in $1.38. That means I can have a target $1.38 bigger than I was expecting. If my original target was the ATR, which was 393, what's 393 plus 138? 393 plus 138 is how much? 3.93 plus 1.38 is how much? Someone type it in. Okay, 521. Now, by getting in at a lower price, I can have a bigger profit potential by having a bigger target. So here, my target was 393. Getting in down here, it's the same trade. My target's still the same, but now I have a $5.21 or 31-cent target, actually. So all of a sudden, this is why your results will vary from other people's results, okay? Depending on literally when you wake up, when you trade, when you want to get into a trade. You don't have to, the entry criteria is simple. It's going to be at or below the open price the day after the signal is valid. If a signal is valid on this day, the entry is at or below the open price the next day. If I didn't get into the trade this day, I can get in the next day because the first target has not been reached yet, and I'm still below the entry price. If I didn't get in this day, I can get in the next day because the price and the ETF was still below the entry price, even better entries, and the first target wasn't reached yet. So I had up to 3 days to get into this trade, and then cha-ching, okay? The majority of my trades are not at the open the next day. They're somewhere at or below. It might be a day later, a week later, might even be several weeks later, because I don't get up at 6:30, but I'm going to get in when the ETF is below. Long as you're below the ETF? No, it's as long as you're below the open. The entry for every option trade we do is the open price of the ETF the day after the trade signal is valid. The day after the trade signal is valid, the entry price is the open of the ETF the next day after the trade signal is valid for every single option trade we do. So if we're going long, we have to be at or below the open price of the ETF. If we're going short with puts, then we have to be at or above the open price of the ETF the day after the trade signal is valid. So here we had 3 days to get into this trade because for 3 days, the price was below the open price of the ETF the day after the signal was valid, and the first target had not been reached yet. So we have lots of opportunity to get in a much better price and much bigger profits. So most of my trades are like this. I don't stress over missing a trade the first day, because some will just take off without you. Great, they're gone. But most trades are actually like this, where they'll shoot up for a little bit, but like if you woke up in the morning and the market had rallied up, you can't get in because it's already going your way and you think you're missing it. So if it opened, shot up to 223.30 something, you don't chase it. You're missing the trade. If you're not already in, you missed the trade. He's like, oh well. But then then it came back down, and it came back down lower, and you have a chance to get in. So as long as you're entering at or below the open price of the ETF, this trade is in play, as long as the target's not been reached yet. So it's real relaxed, casual trading. You don't have to sit there. I hate trying to make decisions at the open, because you tend to make weird decisions. So some people like to get it over with quickly and get a trade placed and then move on with the day. That's okay. I don't stress over it. I get in. I'm like, okay, where's the market at? That's nice. Okay, it's already going without me. I'll wait. If it comes back down, I'll get in. Next day I see it's down a bit. Yeah, I'll get in an extra point or two lower. And that's how relaxed I am. I've been doing it for so long. I don't stress over being in at the open the next day. It will come back down most likely. And there are other opportunities. And there's so many trading potential trades. With the options, ETF options, there are 20 to 40 something potential trades every month. And if you throw in the weekly chart strategies, there's 20 to 60 trades potentially every month. Okay, so I don't stress over it. And then you throw in the futures also. So there are lots of potential trades, so just don't stress over it. It's just really relaxed trading. You're going to see this pattern happen all the time. Most recent on, let's see if we had one recently on. Yeah. Here is IWM. It crossed above. Let's take a look at the data box, because I can't tell which day the orange line crossed the blue line. On this day, the mean line is 200.03 and the SMA is 200.10. So on this day, the orange line is below the green line. It's to be below the blue line, so not valid there. On this day, the orange line is greater than the blue line. It closed below the Bollinger Band. The number of the criteria for the orange line below the blue line is good. So no, I have a valid trade. I have an 98% chance that if I buy an option at or below the open price the next day, that is a 98% chance that my target is going to get hit before that option expires worthless. The ATR that day is $4.41. The open price the next day is 206.15. And it went as high as, take a look at data box, as high as 212. So it went 6 points. So I have a $4.41 target. I enter somewhere during this day at 206 something, and it went up 6 points. So on this day, my target would have been hit. And then I either exit the whole position, lock in my 20 to 30% return, maybe more. Even if it gapped up and shot up that quickly, it might be more than 20 to 30%. It could easily be 40 something percent. We had one recently on TLT that was a 50% return at the first target on a gap on TLT. 50% return first target, because gaps are great for us, especially if you have a high liquidity ETF where where the bid-ask spread won't widen. The more liquidity you have, the tighter the bid-ask spread, the better fills you have. So that's why we like the options that have a lot of open interest. But yeah, it will cha-ching, quick money. Most of the option trades take anywhere from 1 week to 5 weeks. Some of them take longer. That's okay. We don't care. We just want to make money. And at 84% wins or higher, if you take a look at our history on the website, you'll see our history going back to 2019 when we had a full history, but we just made the last few years available so people can see what to expect. And you will see all the good, the bad, everything, but it all comes out to about 85% wins in any given period. see someone making some noise. Can you yourself or be removed? Thank you. I think that's the same person that was in earlier. Okay. All right. So.
Yeah, let me ask a question here.
Yeah. Is that Marcus?
Yes.
Yep.
So I see you have the, what is it? This one here is the IWM.
Yeah.
And you spoke earlier about SPY. So do you have to have a certain number of different charts to be able to figure out which one is the best one to make a trade on that day?
Okay, let's pretend this was, I'm doing a regular review each day, right? Let's take a look at DIA. Do you see the orange line crossing over the blue line this past Friday?
Yes.
The orange line did not cross over. The orange line crossed over back here. So
Yes.
this past Friday, did the orange line cross over the blue line?
No.
No. I go to my next ETF. Did the orange line cross above the blue line?
Above it? Yes.
Yeah. Did it cross above it on this day?
No, it didn't cross above it.
Exactly.
Yeah.
So that is literally how we go through and do the review. You just click on each ETF. You see this one's getting close. This is FXI. Yeah. So we can click through 28 ETFs on one strategy just like that.
Oh,
if you don't see a cross, you just keep going. Nothing to spend time on. If you do see something cross, then you have to stop and do the more detailed review. But if you see nothing cross, like here, I saw a cross.
Mm-hmm.
So then I would stop. I would look at my win-loss stats. Is it 84% or higher? And then I would make a note, okay, this week, make sure everything is valid. And I make a note, this is a potential trade. Then go on to my next one. So I can review 28 ETFs real fast, but as I'm reviewing this one strategy, on this same chart, I'm also reviewing 4 other strategies.
Right.
All using the same chart. Is just very visual. I don't have everything on here now because it would be confusing for the presentation, but it's one more indicator that goes on here. So I'm actually looking for another set of lines crossing up or down, and I'm looking for a change in color on one indicator. And so I'm looking for lines crossing, change in color, or a line making look like a V or a hook up or hook down, change in direction. So I'm looking for all those things at the exact same time. So I'm literally reviewing on one ETF. I'm looking at 5 strategies all at the exact same time on one chart. So for the ETF options, all one chart, I just literally just click through each ETF, and that's it. Just click through each ETF and look for a crossover. If I don't see a crossover, there's nothing for that strategy.
So is this a daily thing or just maybe weekly or?
Daily.
The daily, okay.
We have weekly strategies only. The weekly strategies, that's available for people to trade. There are some people who trade only the weekly strategies. There's some people who trade daily and weekly combined. Some people only trade weekly because of their time availability. They just don't have the time to put forth every day to do the work. So what I do is for the first about 3 months or so, when I'm working with new people, I will email you each day the candidates for potential trades, and then it's up to you to go through and do this to fine tuning. So if you have 28 ETFs and 6 strategies, I will narrow that down for you to maybe 3 strategies valid and 6 ETFs. So you might have 6 ETFs valid on 3 different strategies. I will narrow that down for you and email that to you every day, or at least for the first 3 months. Okay. And if you want to continue after that, then that's going to be on a subscription basis. Right. But if you do the work yourself, that's fine, you know.
So is it considered a daily trader if you do so many trades in a week? Depends on what kind of.
No, take a look back at any of these charts on any of the ETFs. This crossover happens multiple times. If this crossed over here, doesn't matter if the market's going up or going down. We got a crossover, and you buy your call option, targets hit a couple of days later. Buy a call option, mark targets hit. Buy your call option here, targets hit within 2 expiration cycles. Just so you know what expiration cycles means. We use 1 expiration each month, and that's the 3rd Friday of the month. That's the only expiration we care about. All the option expirations where you see weekly options and things expiring every Friday, those literally only got created in the last 15 to 17 years. They didn't before that, and forever. The one option expiration that's been consistent is the 3rd Friday of the month, and that is the only option expiration we care about. Okay, so 1 expiration cycle is from the Monday after expiration Friday until the following month's expiration Friday. That's 1 full cycle. So if something says we need 2 cycles worth of time, is basically 2 months worth of time, or 2 full cycles. If it says 1 expiration cycle worth of time, it's the amount of time from the Monday after expiration Friday, the next until the following month's expiration Friday. That's 1 full cycle. So that's how we know how much time we need in an option. This, by not guessing, all the stats are based on having a certain amount of time in the option. So we, so there's no guessing. And because people would always buy options and they expire worthless, or the time decay kills them. And so people didn't really know how to just buy an option, but this is what we've been doing for a long time, and we got this down to a science. Basically, we know exactly how much time in the option. I'll go with coaching clients, how much is too much to pay for just buying a call or put. There's a price limit where if you pay this much, you realistically won't make any money, because with time decay, it will decay more than you can make with the price movement in your favor. Okay, so I'm going to, any questions so far on anything whatsoever, anything at all? Anything, it's totally open.
So you were talking about the 3rd Friday of the month.
Yeah.
The expiration, is that on the chart there? Can you show us maybe?
It's not labeled on this particular chart, but it's literally the 3rd Friday of every month. So if you pull up any calendar on your phone or computer, if we had a trade valid this past Friday on 8/26, okay, and we need 1 expiration cycle, when would the first cycle start? If we need 1 full cycle, and it has to be from the Monday after expiration Friday until the following month's expiration Friday, when would 1 cycle start if we had a trade valid this past Friday? Anyone? What date would it start?
What are them?
Look at the calendar. When's the 3rd Friday? The next 3rd Friday of the month, and then what month option would it be?
The 19th? No.
But which expiration month would be?
Oh,
be looking at?
This is August from October. October.
That's correct. So for 1 expiration cycle, if we had a trade valid Friday, and we looked at the stats for IWM, let's say with a long trade, and we saw it with 90-something% wins with 1 expiration cycle, then for 1 full expiration cycle, we look at the calendar, the next cycle starts on September 19th. September 19th is when the next cycle would start, and that cycle would end on October 21st. That would be 1 full cycle. We already into 1 now, so it doesn't count. We need 1 full cycle of time. So that means we would be getting an option that expires the 3rd Friday in October. So if the stats say The stats are good for one expiration cycle. And it was a trade valid this past Friday, the 26th. Then the option we would be choosing would be October 21st expiration. That's one full cycle. That's how we know. It's purely by statistics. And that's how we know what to expect every year. That's how we've been trading probably since 2007. So it's not just based upon back testing and stats. This is forward testing. This is what we've been doing in our accounts with real money. This is what everyone I've coached has been doing. And as long as you're consistent, you make money. If you kind of do once in a while, you take a week, two off, come back, it doesn't work. As long as you're consistent, money will end up being net profitable. You'll have your up months, you'll have your down months, you'll have a couple losing months every year. Guaranteed you're gonna have a couple losing months. But as long as you're consistent with your trading, you're going to end up being net positive pretty much every year on your option trades. And if you were doing 2 expiration cycles, then it would be a November option expiration. Okay. So that's how we know how much time, which month to get. Does that kind of answer all your questions there, Marcus?
Yes, very good. I appreciate it.
Okay, great. All right, so anyway, that is that strategy. But like I said, we have multiple strategies we trade in this past 2 weeks. Everything's been short. We've had short trades valid on everything, and I do mean everything. We had sells on every sector pretty much. I'm gonna switch charts a little bit here. I mean, sheet I'm sharing. I want to show you a little bigger picture of what we trade, the different strategies. Let's see, and share. Not that one. Just stats. Here it is. Okay. Again, here the sectors also in copy in the handouts. These are all different sectors we trade, and we pretty much got a short valid on almost everything. And this has been a really, really great week for puts hitting targets, and then we still have a bunch more, in the queue. This is a different one of our strategies, the T-line buy and sell, to give you an idea of what the stats look like for the long, just the long side of it. What you will find is as you get more time, the statistics go up 87% to 89%. This is one expiration cycle of time. This is 2 expiration cycles of time. So more time, higher win percentage. Some people I know prefer to only do 2 expiration cycles. They prefer more time. They don't care about the lower upfront cost. They care about not losing money. By not losing money, you actually end up making more money. Because every time you have a full loss, it requires several trades to make up for that full loss, okay? So, but literally by not losing money, you end up making more money. Like I said, the gentleman who shared all his trades with us, I know there's an online presentation because we actually made a video of his presentation when he shared that, but I will send you the exact spreadsheet. Just email me and I'll see the spreadsheet. The numbers he put on there are very still current. It's real numbers. They haven't really changed. The percent returns with $1 risk. And we always risk the same amount on each trade, approximately. 2% of the account is ideal. If you're going to risk $1,000 a trade, you risk approximately $1,000 on every single trade. You don't risk 1,000 on one trade, 400 on another trade, 2,000 on another trade, because you have no expectation of having because a win on a trade where you risk $400 will not offset a loss where you risk $2,000. So if you keep all your trades approximately the same range or neighborhood of dollar risk, it won't be exactly 1,000. So one might be 850, one might be 1,100, but they're all around 1,000. If you're going to risk 600 and all around 600, you're going to risk 2,000. They're all around 2,000. But you stay consistent with how much you risk per trade, then you actually predict and plan your income. Okay, it becomes more predictable then. This is one of the strategies. T-line, this is the buy side. If you see light blue, it means it's 84% or higher. Okay, so for the sectors, GDX, gold mining companies, QQQ, NASDAQ. NASDAQ is my favorite to trade no matter what. It's always NASDAQ. It's always been NASDAQ. Even when I was a day trader, NASDAQ, XHB home build is 98%. I think we finally had a loss sometime in the last, I don't know when, but 98% wins. That's for T-line buy. This is the short side, same strategy on the short side. The same strategy, but different because the rules change slightly. So short side, all of these are what's in play right now. Also, a lot of these are in play. D-hook. This is a strategy I really, really like. Once again, you see the difference between having more time. If you just sort of guess at how much time in the option, there's a very small margin between making money trading and losing money trading, or not making money trading. Okay, very small margin for error. So if you just sort of guess how much time in the option, you're gonna lose money. But if you have something that's predictable, statistically repeatable, something you can show to 100 people, they can evaluate and come to the same conclusion. What I used to do, I used this one gentleman that I used to give all my strategies to. He's a really extremely competent option trader, and he has advanced degrees in statistics and mathematics. Before I did presentations, what I would do is I would hand him all my strategies to independently test and verify. His first name is Dan. Some of you might know him from SFOG or TOPS. He would independently verify my strategies and come back and tell me, yeah, they look great. And because I always wanted an independent verification. Then I would hand the strategies to other people who I trust, who I know are super duper option traders, because if there's a better way to trade these strategies than just buying calls or puts, I gave it to them to come back and try it out and tell me, because I trust these guys are the best spread traders ever. So I told them, if you can find a way that's better than just buying calls or puts to trade these strategies, I want to know. And they all came back, evaluated, came back to me, said, nope, just buy calls and puts. Because there are times to spread trade and there are times to just buy calls and puts. And all of these strategies we do, they are directional strategies to buy a call or put. So there are times to spread, there are times to just buy calls and puts. And for these strategies, calls and puts only, no spreads. Another one of the strategies, this is for market bottoms. A lot of these became valid about a month or two ago. And they basically, most of them have already hit the targets as the market rallied. So when we market a drop, and then started coming back up, we got all these buy signals. This is one of our Ichimoku strategies. This one we've traded probably longer than any other strategy. But it's for market bottoms and it works extremely well. This is for strategy we trade for market tops. Literally every rally will end with this trade signal. So all of these trade signals have been in play for the last over the last 2 weeks. So this is what we've been trading over the last 2 weeks, primarily this strategy, because it's just been hitting and hitting and hitting with every short you can think of on everything. But the market rallied and our first sell signal is always this strategy. So we trade from the bottom up, we trade from the top down, and we have trades for in the middle, like the Donchian cross is from the bottom and from the middle also. You will see those trades happen. So that is how we maintain these stats. We, meaning Becky, maintains all these stats for everything we do. So we know which, like if EWG, which is Germany, became valid for this short strategy, we will not be buying puts on EWG because it's under 84%. But if we had EWH, Hong Kong, become valid for this strategy for a short, then it'll be under consideration, okay, to buy put options. All right. Any questions so far? Anything at all? I'm open to anything you want. Some people who've been here for a while, ask anything you want. Any issues, concerns, anything, it's all good.
Well, I don't want to take up all the questions.
Oh no, go ahead and take up the questions. Because you will ask this, a lot of people aren't brave to ask the questions. When we had our in-person meetups, even with our in-person meetups, there'd only be 2 or 3 people who do all the talking. Okay.
Well, yeah, I'm kind of new at this.
Questions.
You know, I've been doing basics, options and calls and puts and stuff like this. but I was interested in your what do you call it? Donchian channel.
Yeah.
So I was curious because you talked about the 84% or better.
Yep.
And I'm looking at the charts that you're showing. There's some less than, but you were saying about the light blue is 84% or higher. So then you look at that, it is pretty good to be able to use that as an example. But as a new person like myself, I don't know if it requires one-on-one training or whatever, but to be able to look at something like this, and obviously Becky or whoever your assistant is done a very good job at charting this, it's pretty good. And how can a person like me as a new trader be able to learn this strategy? And is it possible that I have to either incorporate this type of spreadsheet, or is it some information that you can give me to help me learn that?
So to do this particular strategy, if you, Marcus, if you email me, I will give you a little more detailed information, because contact me directly, email me, give me your phone number, email.
Sure.
I'll go to my website and use the contact form. So let's talk after the meeting, because you can do the work yourself. I'm going to switch over. Good time to switch. Hang on a second. Okay. So what I usually do is one-on-one coaching. Now you can do the work yourself. You can, I can send you the charts, and you can set all that stuff up yourself on Thinkorswim or NinjaTrader. The chart you're seeing on the we just use is NinjaTrader. You can set it up yourself, or you can use Thinkorswim. What we do, you can literally, you don't want to guess. So what you do is you go back and find every trade that's been valid, and you document it since the beginning of the ETF, and then you find the day the trade was valid, was the open price the next day, add an ATR to it, and did the price of the ETF reach that target value before expiration, which is 1 or 2 cycles. And you can spend all your time you need to document that. It might take you 2 to 3 hours per ETF. Okay. And that's what you do to establish your business. It takes time, but it's upfront work you do. Let's say you pick 5 ETFs you want to trade out of the same list you have here, and you did all that work, and it takes you, let's say 15, 20 hours worth of time to document everything, create a spreadsheet, the whole deal. That 15 to 20 hours worth of time you spent is basically half a man work week. Okay, that's how I look at it. It's half a work week. That you may do that over a month. And then, but now you have something that you can use from going forward for years, because you did the work to get the stats. Personally, I'll let you know, back when I was an engineer, even while I was working 40 hours a week, I'd come home and spend another 40 to 60 hours a week on my trading. I was going to get good at it. I literally spent another 40 to 60 hours a week on my trading on top of my 40 hours a week as an engineer. Because one of the first people I was influenced by was David Elliott. David Elliott said, and I had a chance to work with him directly here in the Bay Area. He had said to us early on, the reason he got so good at what he did, especially with his technical analysis, is because he never knew anyone else who spent as much time as he did with his eyeballs on the actual charts. And you learn from the charts. You learn the different strategies. You learn different methods of technical analysis. And I took that to heart, and Becky will tell you, I told her that same day that I'm going to spend more time looking at these charts than David Elliott, because it works.
I
It
see.
helps with some guidance. And I was lucky to learn from a lot of people who, at that point in time, were not licensed, certified financial people.
Mhm.
The reason I say that, I was lucky that they were not, because later on, a lot of the people who I learned from became licensed, certified analysts and financial managers. And once they do that, they are not allowed to show us the details of their strategies.
Interesting.
So luckily we learned from, they can sell you trade signals and subscriptions and stuff like that, but
Right.
they're no longer allowed to show you the details once they become licensed and certified. But luckily the people I learned from, that Becky learned from, it was before they decided to get licensed and certified. So they gave us everything. We learned so much stuff.
That's
And that
very
knowledge is all incorporated into our strategies now. There's not just, we don't just look at price, time. Time is a big factor. If you
Mhm.
incorporate, I learned that from GAN analysis. If you combine time with price, your analysis and results become so much better. So everything has to happen. If I'm doing futures, trades have to fill within a certain amount of time. If it's not done within a certain amount of time, there are certain things we do. Same thing with options. I just talked about time. You got to know how much time everything takes. Time is a huge factor, but if you have time down and price, your results improve so much more. So what we do, like I said, you could do the work yourself. That's not a problem. It's just work.
Yes.
It requires time. And I can show you how to do it. If you talk to me, I can give you a plan and you can do it yourself. Otherwise, what I do, I work with people one-on-one. I will hand you all the 28 ETFs, all the stats, trading plans for all of them, everything set. If you are a relative newbie, I will help you get all your charts set up. I will help you get your account set up if needed. I will help you with everything. If you're local in the Bay Area, I'll either meet with you one-on-one in Santa Clara someplace, or it'll be on Zoom. So
Yeah.
I like one-on-one meetings in person, if at all possible. If at all possible, I like to meet one-on-one. But it's better to start out with a plan, because the reality is a lot of the people who contact me, it's because they've lost anywhere from tens of thousands of dollars to up to $300,000 was the highest one.
Wow. Okay.
And it wasn't until they lost that money and that they actually contacted me for help. But that's usually what it takes. So I encourage people to start out the right way and get something focused, do all your due diligence, check out different programs, see what you think is right for you and your personality. For what we do, this is not day trading. We make all decisions after the market is closed. You do place the trade sometime the next day or 2 or 3 after the market's open, but all your analysis is done when the market is closed. We don't sit there in real time looking at stuff go up and down and try to make decisions. We don't do that. Everything is done when the market is closed, and it's just straightforward. You know your ATR, as at the open price the next day, that's your target. So you know what ETF, you know the probability of success, you know how much time you need in the option, you know your entry price for the option, and you know your profit objective. You put,
Right.
and you just put in you buy the option, then you put an order to sell conditionally when the ETF goes above a certain price for a call or below a certain price for a put. That's it. And you walk away, you live your life. Next day, look for the next set of trades. You need to get in 10 to 15 trades a month. You get in 10 to 15 trades a month, then the numbers work themselves out. It's all about statistics. We want to see 85 to 87% wins. That's 5 to 7 winners for every 1 loss. Since we don't know how much we're going to make on one trade, we know the range can be anywhere from 3% to 50% on a winning trade, with most of them being in the mid-20s to 30%, but we don't know how much we're going to make. So we want to maintain our 85 to 87% wins, and we'd never have any trouble doing that over a 6 to 12 month period. That's not a problem. Just be consistent. And because you will have 2 or 3 losing months every year. That's normal. And so far we had, I think, 2 losing months this year on options. The history is on website, but I
Right.
do one-on-one with you, and I expect you to commit at least 6 months of trading. Okay,
Okay.
because after 3 to 6 months of trading is when you will have everything routine down. You will have experienced the ups and downs, the sideways times. At some point in time, you will have 15 trades on at the same time, and they will all be going against you. And you will have bad thoughts about me. You're going to you will second guess whether you're doing the right thing or not. You will second guess whether you should have even started this program or not. You will maybe even say it to me. And I get that all the time. So I know what to expect, because people freak out. I mean, that's why you have to get through 3 to 6 months to see the markets go up, go down. At some point in time, you will lose sleep because all your trades are going against you. Becky will tell you this. At some point in time, you will lose sleep because all your trades are going your way and you're making too much money. Something can't be right.
Right.
But you go through the 6 months to get used to it, and then as long as you're consistent, you see yourself consistently making money. Okay, it's working out. You see how the numbers work out, because of the 15 trades all going against you at the same time, somehow, some way, 80-something% of them will end up going your way and being a win. But you have to go through it. You got to feel it. It's feelings, it's emotions, and until you experience it, it's fun. It's like a roller coaster, but you got to get through to the other side, and then you're good. Then you start trading bigger. You might have been trading $600 a trade for the first 6 months, but now you're feeling good, up to 1,000. That goes well for a few months. Start funneling money from wherever, make your pool of trading resources bigger. Now you're trading 1,200. Now you're trading 1,500. Now you're trading $2,000 a trade. But you grow into it. Like I said on here on our website, what normally takes 2 to 4 years, we can reduce down to 6 to 9 months. That's absolutely true, as long as you commit to the process and trust me, trust yourself, and you gotta have enough capital. If you don't have enough money to trade, well, that's a problem too. So you gotta have enough capital to actually trade.
So I like your passion. That's excellent. Obviously you know what you're doing. So a program like this, like I said, I just done basic options, calls and puts based on what's been going on, basic, simple stuff. And it was really easy. But this option coaching details that you have, how long does it, what is it? You said 6 months or 3 months or something?
I don't give a time limit or how long I'll work with you. There are people I've been working with since 2008. They still email me every single day to verify their trades are correct. The people on the meetup right now who started with me in 2014, if they want to meet this week to go over some stuff, I'll meet with them. I don't charge them extra for that. It's like, you want to meet, that's great. There are people, and they have everything in between. There's some people met with me once, never heard from them ever again.
Right.
I'm like, okay. And there's some people who message me at least once a week. But I don't cut anyone off. So you need to talk, chat, no problem. I will email you the valid trades every day to get you started. That's usually for 3 months. After that, it's a subscription basis if you want to keep that going. Otherwise, you do your work on your own. But I want to make sure for those first 3 months that what you're seeing is the same as what we're seeing. That's why I email you the trades every day. So I want to make sure you can recognize what's valid. And then I work with you to be able, I want you to be able to do your analysis of 6 strategies and 28 ETFs within 5 to 10 minutes.
Okay.
And within 5 or 10 minutes, you should be able to go through every ETF and every strategy and know if you have a trade or not. If you have a potential trade, then you might take longer to evaluate it, but you should be able to do your analysis to find the candidates that quickly. And if you're taking much longer than that, your procedure or process is off. I had one guy taking 2 hours to do that, literally 2 hours. I had to sit with him and figure out, what the heck are you doing? And we identified what he was doing. It was very inefficient. Once I showed him how to think. It's literally a thought process. How do you go about it? And he's like, wow, I hadn't thought about doing it that way. But once I showed him, it just accelerated. And he was like quite happy. He's actually changing careers into the world of finance, from engineering and everything. So this stuff is fun. But My cost is $17.50. If you have a little experience with options, it makes it a lot easier. And like I said, it's all one-on-one. And if you are brand new, don't even know what a call or put is, like, I mean, you have no accounts, nothing, then we have a different program for you that we can talk about. And if you want to do futures and options, it's $34.95. But anyone want to do combined futures and options, anyone on my meetup group, I will take $500 off this price. So $500 or the $34.95, I'll take off $500 off that price if you want to do both futures and options. But for options only, it's $17.50. Anyone on the meetup right now, it'll be, I take $100 off. It's $16.50 for anyone on the meetup. Let me know by the time this week is over, and then I can start working with you and gearing up. You just need to have a trading account ready to go, or if you don't have one, we can help get everything set up. Have to get your trading platforms, analysis platforms in place. Either Thinkorswim or NinjaTrader are the ones we'd be using. If you have a different one, that's okay too, but you have to do the work to set it up. But I will give you everything you need for NinjaTrader or for Thinkorswim, all the charts ready to go, and that we can work with. Okay. Do we have any questions? And we want to look at any of the charts for this particular strategy. Is there anything you want to look at? I can do that also. Or any questions on anything whatsoever? Okay, given is the end of August. Barbara?
Yeah, hi, everybody. Do you have any classes that you go to, say in a group? You don't, do you?
I don't do group classes since everyone is, I've always done one-on-one. I've had some people, we chatted briefly about doing groups, but that requires coordination between a bunch of different people at a certain time, and that just didn't work at all.
Okay.
It just never worked out, being able to coordinate people all meet at the same time. And then with different knowledge backgrounds, working with one person is completely different than working with someone else. Someone with more computer skills, I have to work with differently than someone who is an IT manager, okay? So I adapt whatever I do to the person and how quickly they pick up on stuff. Some people require a little more hand-holding. Some people get it right away. Some people do more homework on their own. Some people don't. The more homework you do, which I give you, the faster you'll pick up on it. So, but no group classes, it's just one-on-one. We tried groups, but it was just ridiculously difficult to get everyone at the same time.
All right, thank you.
All right.
Eversley, I'm one of the people who it takes more than 6 minutes to
Well,
figure out.
we know how long you took, Connie, to trade live. You hold the record.
I hold a record.
You hold the record, Connie.
Wow, that was only a year.
Only a year, exactly. That's but at least you paper traded for a year.
Yeah.
At least you paper traded. But once you got going, you know, it's like you'll have all the ups and downs. But bottom line, as long as you're consistent, you come out on top. And it's fun.
Right. But I'm one of the people who takes a long time to figure out which things are valid, unless you give us
call me or message me later, email me later. Let's set up a time to talk.
Okay.
We'll set up a time to talk later on, and I'll go through the charts with you. Okay. And I will show you how I do it. And it's literally a thought process of how you look at the charts. How about that? And are you the NinjaTrader or Thinkorswim?
I would love to learn Thinkorswim because that's the system I mostly use, but I have been using NinjaTrader because you gave me the charts in the beginning. But
don't you have the charts for TOS also?
What? No, I don't have the chart.
Really?
The charts for TOS. No.
Okay, I'll make sure you have the charts for TOS and then show you how to go through on TOS and do it the same way.
Okay.
Yeah, you should have a
because when I came in a few years ago, you told, or a few. You at that time you were saying use NinjaTrader
for the analysis. That's correct. but
Right.
you also had a copy of the charts. But that might have been set up on Jessica's computer, not yours, maybe.
Okay,
That might have been it.
okay,
So I will email me later. I will send you all the task grids, and then we'll set up a time to talk. And then
Okay.
I will go through it with you so that you get a process down faster and recognize the trades really fast.
lovely. Thank you.
No problem. All right. So,
Well,
Marcus.
I got one more question here.
Yeah.
As far as the Excel or the charts, is there any kind of trading on how to do that? I don't know. I don't know much about Excel.
How comfortable are you using a PC?
I'm very comfortable with that.
No
yeah.
problem.
Yeah.
The rest is not a big deal.
Oh, okay.
That's not a big deal.
So you just have to have a
and-
Microsoft Excel or something?
Yeah, that's just opening a file.
Okay.
Yeah, so as long as you can use your PC or laptop or Mac, we have no problem with this. This is
Yeah, I
the
have a-
toughest battle is when someone doesn't know how to use a computer.
No, I got the basics down. It's
Yeah,
just,
as long as, it's not a big deal at all.
okay.
And
thank you.
and my first session with everyone is setting up their computer, because to do it on your own is impossible. You won't get it. You just won't get it quite right. It will be different than what we're looking at. So that's our first session with everyone, is setting up the computer. And that usually takes about an hour and a half, realistically.
Okay, I appreciate it.
All right. Let's go ahead and wrap it up. Let's see, end of August now. So probably looking at doing the next meetup for maybe sometime mid-September. Probably, maybe we do one on Expiration Sunday, on Expiration weekend. That Sunday for the next meetup. We'll try to keep it options. A lot more people have been wanting options, so we'll do the next one option, maybe the one after that futures. There are a couple of videos online on our website with both options and future strategies, and if you might be a couple more too that I have available. If you send me an email, I can send you links to them so you can take a look at them as the approach. And also, if you want that listing that shows the 7 months of live trades that someone did with the amount of dollars they risked, they paid for the calls and puts, how much they made, percentage returns, and how the money adds up, send me that, because that is still valid today. It hasn't changed. Those numbers are still very accurate, what you expect to make on winning trades, and it'll show you the big range and how it adds up really fast as long as you're consistent. Just email me for that information.
Okay, sorry to interrupt again.
Yeah.
So let's, what was I gonna say? What was the futures, right? Futures. So you have futures and options. What's the difference? Well, I know the difference, but what's the advantage of doing the training with beyond the coaching details?
Okay.
Is that part of the trading? I mean, futures, I start saying.
Futures, you will get futures. The trades will take anywhere from a few hours to a few days, realistically, to either reach your first target or be stopped out. You will so futures are exact. You know exactly how much you're going to make or lose. Exact.
Right.
Options, you know how much you could lose because you control that. How much you're going to make on a trade, you don't know. Futures, you know you're going to make at least a 40 to 50% return on every single winning trade. On every single winning trade, you're going to make a 40 to 50% return on your money. So if you risk 40%, risk $1,000 on a futures trade, on a win, you will make between 400 and 500 minimum. Unless you trail stops, you can make more, or you will lose $1,000. At 80% winning trades, now you do the math. If you have, you need at least 3 wins for every 1 loss to make money. That's 75% winning trades. At 75% wins, you are profitable. At 80% wins, you are very profitable. At 85% wins, they're extremely profitable. And we average in the 80 to 87% wins on our futures. This year has been a little bit more, the last 3 years have been awesome. I mean, anywhere from a 45 to 60% annual return. This year, we're probably down about 14, 15%. for the first part of the year. So this year so far, futures have been down. This month is going to be a good month. Last month was a good month. So we're ramping up again. But the first few months we had a couple losing months this year so far. So,
Right.
but it's more immediate returns on your money one way or the other. But options, you don't know what to expect. There's more decisions to make. Futures, there's more analysis. There's going to be more charts involved with the futures. There's not just 1 or 2 charts. There are going to be several charts involved, and there's more analysis involved. So once you get good at it, there's one guy I'm working with right now, and I'll tell you, he's going to be really, really good, because here's why I say that. You know how I said I email out everyone's trades every day? He told me he doesn't want me to send him any of the trades. He wants to figure it out for himself every day, and then contact me to verify if what he found was correct. That's a person who's going to be successful. The person who's doing the work themselves, and then they ask me, is this right? That's the person. They're not waiting for me to send them the trades. They're sending me the trades first. That's what I like. That's how I know he's going to be really good at this stuff, because
Okay.
that is perfect.
Okay, so I'm trying to not distinguish, but decide based on the cost if I should do futures and options together, but I have no experience.
You can, I would give you, if you do them together, you want to start with one, get really good
Right.
at it, and then ease into the other one as we go along.
Okay.
I might show you 1 or 2 of the futures. If you're focusing on options,
Mhm.
this would be a good time of year to focus on the options, okay?
Yes.
Because I'm telling you, it's a seasonal thing. Right now, we're in short mode. I've been posting on our Facebook page. Let's see if I've been posting on our Facebook page, because we have a Facebook group, for the last couple of weeks, that in August, the market pulls back.
Yeah.
That's exactly what's happening. It's every August, the market pulls back. And then we're looking for that next big bullish swing, which will happen probably sometime in the end of September, October timeframe. So now we're all puts, and then, so if you start now, you'd be getting ready for the long side. You'd be spending the next week or 2 getting ready for when the buys happen. Because right now we're in sell mode, and we already had all of our sell. Right now in sell mode, so you'd be gearing up for the next swing upward in our massive uptrend. So
Right. So what's the cost of the program for the futures and options?
$17.50 for the options, $17.45 for the futures. So if you just do futures alone, is $17.45, combined $34.95. If you do both at the same, if you pay for both at the same time, I take $500 off of this, so it'd be $500 subtracted from the $34.95. Was that 29, whatever it is, 95? So I subtract 500 from that if you do both. But don't try to stress your mind over doing both at the same time. Learn one, and then when you get, after about a couple of weeks of working on options, then we can kind of start easing you into the futures.
Yeah.
Because it's too much. You'll be
Yes.
overwhelmed. I guarantee you'll be overwhelmed trying to learn both at the same time as a new trader. So you focus most of your energy on the options, and we'll really get you ready for the end of the year. And then along the way, we kind of ease you into the futures. The more you learn the options and the charts, it will actually help you with the futures too.
Okay. Sounds great.
Big question. Do you have a Mac or a PC?
I have a PC. I mean, sorry, I have a Mac, everything Mac.
Then I cannot do futures with you unless you can run in a Windows environment on your Mac.
Well, I also have a PC laptop as well.
Then no problem.
So
The
I should probably
futures-
start with the PC and just do everything with that versus.
we cannot do the futures on a Mac unless you're in a Windows environment on your Mac. The PC can do all the option stuff. That's no problem. And your Mac can do all the option stuff, no problem. It just can't do since our future stuff is on NinjaTrader. NinjaTrader does not run on a Mac. It will run on a Windows environment on a Mac.
So if I what they call it, section off my Mac and do both? Well, I don't want to do that. I have a PC that I
Yeah,
can.
run it- yeah,
both.
do the futures on the PC. It's just easier.
What about using the cell phone? Do I just need, because?
No, it doesn't work. You know, you need a real Windows. You need full Windows.
Okay, no problem.
Full Windows.
Yeah, I have both PC and the Mac. I just have a PC for some other issues.
Yeah,
I mean,
so your
like-
Mac is no problem to do
Yeah.
any of the option stuff. That's no problem. It's just that you will need a Windows environment to do the
Yeah.
futures because it's on Trader.
Okay, I
Right,
appreciate it.
so that's the difference. But yeah, contact me, message me. I'll use the form on the website or just email me directly or call me even, and then we can go through and I'll give you a reality check of what to expect, you know, so on and so forth. I like people who know reality.
Yes,
So
appreciate it.
no problem.
Thanks.
All right, I'm gonna go ahead and wrap it up now. You need to reach me. My phone number and email is on the handout and also my website, behindscenes.com. If you haven't been there, it's this site. Here's where the handouts are. The contact form is, I'll put a link to the contact form in the chat window also. So I just put a link to the contact form. So just go in and fill that form out if you want and send me any information. The details of all the programs are on here and costs. So, and if you look at the homepage, there are a couple of links to a couple of recorded webinars, videos you can watch here too on the futures. This will give you a good idea of the future strategies and how we go about trading futures. I put this on here as a picture of 2020 and just trading NASDAQ and just the NASDAQ. It was 41 trades and 3 losses. This is 2020 in 1 year's worth of trades identified on one chart. This is how we trade. There's 90-something% winning trade. This is how we trade. We trade up, we trade down. Okay, so it's good to take a look at that too, just to see how our trades come about with the different strategies. Nice graphic. All right, I'm going to wrap it up now, and we'll see you guys next month. We're looking at probably the 3rd weekend in September. And you guys have a good Labor Day weekend and holiday and everything, and be safe. And call me, email me, message me with any questions, and hopefully I can work with some of you as we end the year in a nice uptrend, which will eventually come within another month or 2, and we just like crush it as we end the year. All right, thanks a lot.